The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Basil Chapman, Tiger Technicians Hour on this 28th day of September, wrapping up one more day to go to get that candle for September completed. And usually September is an awful month. But the last couple of years, it hasn't been that bad. So history is kind of being turned on its head. Actually, the September chart has been turned on its head because here we are very close to all-time highs. And I'm going to discuss that in the context of where we are, what we're doing. Let me do a couple of things. One is I want you to just say that in the Chapman Wave methodology, what we're always looking for, let me just pull up this chart so that some of you are new to my work at least. You'll know what I look for. You look for the lowest, most obvious low bar. That's the easy way to do it. Sometimes it's not so obvious. But what I really look at is from the lowest low bar, we start a wave count. And that wave count goes to 4 higher peaks, and I alphabetize them uppercase. And that fourth highest peak, peak D, the fourth highest peak, is where other things can happen. It can recycle and go to an EF and a G to the upside. It can recycle by having the letter names, having an alternate count for the letter names, and that could take you to an even higher buy mode. In other words, you can go one buy mode to a D and then have a brand new one that goes not only to another 4 peaks higher, but it can even go to E and an F. It's a very powerful indicator. Or peak Ds where you can have a deeper decline. We've seen that not hundreds of times, not thousands of times, but in the time period I've been here, there were 13 years or so, 13 years, 2003, 14 years, tens of thousands of times, or at least multi-thousands of times. Let me get this away and I'll show you exactly what I'm talking about. One of the reasons why I wanted us, for my subscribers, to try to stay long, or at least on the long side of the Dow, is that it only made a peak C. Look, the S&P E-mini went to a D yesterday. It went to peak C, pulls back at 2507.25, and yesterday spiked up and hit 25, I think that was 09, 2509.25. Had a little bit of a pullback early morning, held the 9-period moving average. The MACD, I've been talking about this. The MACD is still very good. It's got that dolphin formation, which should see the mouth open. That green line should expand, and that will help get it a little higher. And the stochastics above 80% at 83%. The weekly chart took out last week's doji high, and that to me is a very good sign. If it actually closes above last week's high, that's 2507.25. That's going to suggest that you've raised the base on the shorter term. So, and this is the 120-minute chart, made a peak D at 2509 in an up channel. It's in the middle of that up channel. It's acting pretty well. The MACD is pulled back, tested the 9-period the 9-period differential, has tested the slow moving average, 26 moving average, and now is bouncing up. Stochastic's not that great, it's 60%. Let me get out of this because I want to show you a couple of things here. Here we go. So that's the S&P. The SPY went to a peak D yesterday. A new high today would continue that. A lower high would make it a peak D. So 250.49 was the high. 250.50 would extend this leg D. And we're at 250.17 up 12 cents. And we've recycled. We've recycled to an F/C in the weekly chart. So how it closes tomorrow, the weekly chart, how it closes tomorrow, is going to be really important to deciphering to say whether or not it's a C and we should still pull back and then go to a D, or whether it's going to pull back much sharper. The 120-minute chart has a peak C and it just needs to go above, what did I say? It was 250.48, and that'll start another leg. That'll be leg D in the 120-minute chart. So what I'd say to subscribers to my opening call, a very comprehensive. My wife said to me the other day, how long do you spend on your morning newsletter? I said, just as long as I can. I found that the more intimate I get, the more I the more I extrapolate data and try to filter it out into my methodology, the more comfortable I am with the markets. It just seems to me that that's the way it is. I don't want to just have a software program pulling up something and say, oh, yep, we're still going up. Software program pulling up, saying, oops, we're still going down. I like to do the homework. I always think of it as like in the old days, if you had a little soapbox, a little go-kart soapbox with just wheels and a box, that's when you're riding by the seat of your pants. And as you then eventually you get a motor on it and it gets faster, and the calibration gets finer because you're making sharper turns, etc. You want to get that feeling. You can do the same thing. Sure, very talented people can get on these things and just do it. But I'm saying that you want to use talent as well as technique. So this is what I said to subscribers this morning. This is what I do is, let me just show you quickly. I found actually going to the 120-minute chart in my analysis starting late in the day for the next day really does help me. So this is the daily. I want to get to the 120-minute chart. Is that? Yeah. So here's the 120-minute chart. And what I had said is my analysis turned my Chapman wave 5 upside down, that there should be a 4 to the downside, and we should get a 5 to the upside today. If that's the case, because we are looking for that D to occur in the Dow daily. So this is the 120-minute chart, and I showed two charts, one without the MACD and stochastic and one with. And my analysis was that we are now there's that up arrow, that we're in a buy mode in the 120-minute chart, and then we should make a higher high for a leg C, and then it should get to a D, and there's a cup formation with a left side, right side price time match, and by this time tomorrow, we should be trying at least to give a test of the 22,419 all-time high, and that would be the left side, right side price time match with the Chapman wave inside wedge target resistance line. All right, that's the 120. The daily chart, I said that the Chapman wave cup and ladle invariably goes to a D. That is when you break the left side lip decisively, preferably in a B or a C, which says you should still get to a D. Well, we went to a peak C, and that says on this particular pattern, you should make the cup and the ladle. The ladle has turned around, but I'm thinking there's a larger ladle that should see a nominal new high. Then then I give the whole thing, and what I said here was today the Dow must be at least plus 40s or more. No, let me tell you what I said in my overview. It was even more exact than this. What I said was, I go through the whole thing, what's going on. The IWM made an all-time high. The XLF is acting very well. That's the financials. The IYT, the transportation, the Chinese made all-time highs. That's usually very good, very positive action. So what I said is, when always at the last few lines of the synopsis, if you don't have much time, you're looking for what's going to happen intraday. I talk about whatever is important, the VIX index over there, or the 120-minute Dow. But what I really did talk about is, as I said today, if the Dow, the S&P, and the composite index overcome any early weakness to bounce by 11:10 a.m. to noon Eastern time to Dow plus 40s, a good close can be anticipated. If weak at that time, it might have to wait until Friday, the last day of the month. So here we are. The Dow is up 44 at just after 12 o'clock. It's met all our criteria. I'll be right back. Basil Chapman, Tiger Technicians Hour.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. So this is a 10-minute E-mini chart. You'll see the nice symmetry in these cup formations. Went to a peak D. Remember, we talked about these D. Look, there's another little D right there. Look at the sharp pullback. So that D made a cup formation with two Ds. Look at this. One peak D, two peak Ds, just in this chart that I'm showing you right now. This goes back to 9 o'clock yesterday, I think it is. Two peak Ds in the middle, going to 1 o'clock this morning. And then it pulls back quite sharply, starts a brand new buy mode, goes to a D, and now starts a brand new move. It's an F/B. This is that alternate count. I might turn some of this today into one of the, like Friday's Chapman Wave technical hour, where we go a little bit more deeper. A lot of questions I get, I try to deal with it in the Chapman Wave and the methodology, which I can't do in my newsletter, and I do it live. So this is a very, very important thing, because what you've got is it took longer to get to there was a perfect left side, right side price time match to the last peak that was made just before 11 o'clock, around about 25.05. Then it pulls back. That was the question. How do you extend it when you've had a high going all the way to that 25.0925 level, which is hit 1, 2, 3 times for a little triple top right there, back at just before 4 o'clock yesterday. And then what do you do when you're starting to extend in time? Well, what I do is I use trend lines. And I take the trend lines from particular levels. And in this particular case, it's broken above one and it's below the other. And that says, if everything works out, that by 1:20, we're now at 12:20, in an hour's time, there should be some kind of a test of that 25.0925 area, or get close to it. That's the way it's looking right now. As long as it holds 25.05 to 25.0450 support. All right, let's get out of this. Now, what I want you to do is this. In the news today, it says Ford relies on leather and options for luxury pickup truck that would cost over. I'm asking you now. I've never had a truck. I've never actually, I don't even remember, maybe a couple of times I've been in trucks. But I'm looking at these trucks and they are becoming more and more elaborate. And I'm looking at work being done here where they're knocking down houses and building double the size In fact, yesterday someone was telling me that they are working with someone who's got a multi-million-dollar home, and they want to now add a golf screen so that you can practice, one of those simulated golf things. So the golf, so that's a $40,000 screen, and it's going to cost hundreds of thousands to build the room for it. So I'm looking and I'm seeing these workers now driving around with vans that I don't ever remember. I just do not recall seeing workers driving these kind. And I mean, it's a sign of success. I'm quite impressed. But in fact, what I'm looking at is these four-door vans that are really luxury vehicles. Well, look what happens. Ford relies on leather and options for luxury pickup truck that could cost over $100,000. That's not a little money for something that you're going to put junk in, just your stuff. So it has to be for a very special reason. Then there's another little article I'm looking at, and it says, and these to me are all signs of some kind of a top. Oh, I was also told about real estate agents now. There was a house going for 700, or I don't know, rent. I don't know what it was. I think it was a house for about 700, maybe 800,000, and the real estate agent had an offer 70,000 above. Someone else came in. This is the last couple of days. Someone came in, made it 100,000. This is 100,000, 12% or more over the asking price, with no contingencies. Here in New England, especially in the Boston area, you want to have contingencies. There are just so many. Pitfalls, from termites to. I don't have to list it. There are so many pitfalls that if you don't check them out, you're in for a huge cost over and above what you're spending. So we are definitely getting really toppy in the real estate area. I don't think we've made the top yet. I think we're getting close. And we'll see how this all works out. Maybe it's the interest rate when the Fed says, yep, we think we might bump up. Maybe that's going to be the effect. I don't know. But we're getting close. So I've got high-grade copper right here. I was asked about it. Huge move today. It's up 1.96% to 2.9870, up 0.057. This is leg B. Now, my thinking is, and the reason I think I mentioned it yesterday, that I was not going to put a down arrow, even though it's a peak D in the weekly chart of copper. It's gone to A, B, C, D. Remember, these are what we start to look at with our foot coming off the accelerator and just hovering over the brake just to see what's going to happen. And look what's happened. A nice move. Hasn't taken out last week's high, but on the weekly chart. But this is very important. And one of the things is I didn't put a down arrow because the MACD was still quite strong. And the stochastic, yes, it pulled back, but that MACD's fast-moving average is showing some internal strength. I suspect copper will rally a little bit, and then it's going to come back down, test the 2.90 area. That's going to be very important. So I hope that answers your question. On a very short-term basis, we're in leg B, gone above the 200-period moving average. I think we could chop a little bit, try to get to the 2.989, maybe 2.995 area. I'm not sure if we're going to hit 3 in this bounce. We'll see. It's pretty close, but we'll see. So let's go to the S&P. I was speaking about the Dow. I didn't mention the S&P. So the S&P has made that peak, made a leg E. And remember, Friday a week ago, it was a dividend. That's why it pulled back instead of making a new high as the S&P cash did. The SPY, I meant to say, the cash went to a D. The SPY did not go to a D. It went to a peak C1, C2, and then yesterday it spiked to 250.49. So this is leg D, and the weekly chart, I just did that, it's gone to an FC. The QQQ, wow, what a long day. I've been up since about before 5 this morning, working. I'm not sure why I did wake up early. I just felt I needed to do a lot of work. Gray leg A in the QQQs at 144.29. Nothing much to see here, folks, because I think that the Qs are still under pressure. It makes the upside limited. I think at this point it makes the downside a little bit less limited because I think we can go to slightly lower lows. I think if we take out 142, there's a chance we could test the 141 to 140 area. That's what I'm thinking short term. But just in the near term, I think if the Dow gets to leg, let me just do this one more time to show you. If the Dow gets to leg D in this rising wedge formation with the MACD's fast-moving average, the 9-period differential, expanding a little bit here, stochastic holding nicely at 84%. If it's able to do that, especially by Friday, and close over last week's candle, or no, break above it. I'd love to see it close over 22,419. But if it breaks above it and then comes back down, that's okay. But I'm thinking that this is going to be a leg D, and then I have to do an assessment to say, are we ready in leg E in the S&P, leg D in the Dow, etc.? Are we ready for some kind of a pullback? Well, wait a minute, pullback? IWM is still acting beautifully. It's at 147.68, hasn't gone above yesterday's all-time high. But this is really impressive action. The stochastic is flattening out. That's very important. So I'll be back straight after this. I'll just do I'll just show the chart of gold as we're going out. There it is. Gold is still pulling back down 0.7. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So Roku just came public, streaming media. So this is 2-minute chart, came public opened at 50.78. That was pretty much the low. It's trading right now at 20.40. So this morning, anyone who bought right at the opening is unusual. This is really good action, and it's actually in leg E as we speak. So if you're looking at a trade, I think we got to ourselves every year we like to look at something that looks like a little trading phenomenon. We had one. We got stopped out today. They had a really good gain. It had a wonderful gain. I just held it too long. So we took a gain, not as big as it was. But I like to see these things. So this is E. It could be pulling back. Keep it on your radar for those of you day traders, because it's just sometimes these can be a lot of fun. I mean, you put your stop in, and that's, you treat it just like anything else. It doesn't have to be that it's an IPO. It's a 2-minute chart. That's all you're looking at. And the 2-minute chart's already gone to an E. The first one was a D, and now it's gone to an E. Should pull back a little bit at 20.34, probably in the 19.30 to 18.70 area. If it gets there, that might be very interesting just for day trading. So now let's go back to question I had was VIV, which is Telefonica Brazil. I just don't think it's ready. I'm going to take maybe in the next break, I'll look at it, or maybe by tomorrow. I don't see it right now. I want to see where this lands on the pullback. So just, keep it in mind. The person who asked has a good eye for this kind of dividend stock, especially in the telephone area. It's on the 200-period moving average in the weekly, on the 9-period moving average. I want to see it hold first. So let's go on. We're looking at gold. So gold is, it should try to rally a tad here. Yeah, it's down 0.2. It looks to me like gold could have a little bit of a bounce. And the reason being, if you look at silver, which has a same kind of chart, but the weekly chart is not as good. Silver is in leg C, and gold is in further down the range in the letters. But most importantly, it's how the dollar, which is already the dollar trading at this particular point, TXY, is the dollar index in leg C. So I think it will. I think it's going to go to at least a D. The big challenge here is how does it treat, if it even gets there, but how does it treat the 94.14 high of the 15th of August, 1914 on the 16th of August, and 94. What did I say? 94.14 and then 94.08. That little cluster reversal top. How does it treat it if it can get there? My thinking is it is going to get there. That's going to be the big test because the stochastic is good at 88%. The MACD is climbing. The histogram is climbing. So far, all very positive for the dollar on the shorter term. So that's the gold, the TLT. So I had a question about the TLT. Someone said that they think I've missed it. Actually, I'll give you the exact wording because it was a little weird, the wording, because they said, I don't know if yep, there it is. Your interest rate analysis seems to be flawed. The rise in interest rates, as shown by the TLT chart, is pointing this market lower. The banks are rallying because they will make more with rising rates, but long term, this will hurt them. Also, just my 2 cents. Yeah, you can have your 2 cents. Actually, it's worth more than 2 cents. I agree with those points. But what I am saying is that on the shorter term, look, the TLT has gone to a leg C to the downside. It's gone there in a shorter period of time. No, it's exact. No, it's not. So it's gone there in almost the same time, maybe shorter by a day, testing the 124.71 low of the 15th of August. And if you're looking at my long-term charts, look what happened here. This is the interest rate. Look how it spiked. That interest rate has spiked, and for it to go lower, it's going to take a lot of effort at this particular point to go from 2.875 in the 30-year down to, say, 2.797 without, how can I phrase this? Without there being a change in the trends that we've been watching lately of the dollar rallying and crude oil actually rallying and the bonds coming down, yields going up, gold and silver coming down, as well as copper. Copper just had a rally, and that's going to say there's a good chance gold might follow it very soon. But I think it's just a bounce, and that's really what I'm thinking of. And I'm not going to get into the whole rate thing just yet. I want to see what the close is like on Friday, and then I'll do my analysis. So no, I'm not ignoring it. I'm saying I think that higher rates will impact the real estate market. But let's just be looking at apples to apples. The HGX, which is the Nasdaq housing sector, housing index is rallying. It's in a leg E/C in the daily, big improvement in the MACD. Stochastics is at 92%. You've broken out. I really have to think of this as a B. I mean, maybe it's an F. Maybe it's F/B, but I think it's more like a B right now in the weekly chart. This is very good action in the housing sector, and it's broken. Oh, I spoke about this last week, and I said we've got a few months to go before you get left side, right side price time match from the July 2005 293.66 high, which did drop to 54.31%. What is that? That's a 78% decline. Oh, I don't know what it is. So it's a huge decline, 70%, and 54.31 to today's 291.66 high. Look, we're almost there. 293.66. It's just got 2 points to go, and we're touching the 2005 high. And this is where you often bump into resistance. This is a monthly chart of the Philadelphia Housing Sector Index. Did I say NASDAQ? I don't know why I said NASDAQ. It says NASDAQ, Philadelphia Housing Sector Index. It used to be clear, Philadelphia Housing. So this is the Philadelphia Housing Sector Index, and it's traded on the NASDAQ. I don't know what the heck's going on. Anyway, I've followed this for years. I didn't ever see the NASDAQ sign. So now let's go on to, and IBB, I was asked about. IBB, what is it trading at? 330.67, just stuck in this range. Longest range I've ever seen it go sideways in such a narrow 327 to 336 range, 10 point range, and it's still stuck in the range. Now comes the big thing, the SMHs. Let's see where they're trading. Nice action, up 25 cents at 92.12. I wouldn't have believed it before when we were in this candle right here, this candle of the 25th, when it plunged down to 89.49. I would have said, you know what, we could make an arch formation. The doji candle from last week, that's the candle right here, in a D/C, could be a real test of strength and weakness. But I think it's now more a test of strength. Look at this bounce. So I'm not giving up. I need to see the weekly close tomorrow. Wow, if it breaks above 92.90, well, it's only 80-something cents. Oh, my goodness. That would be really good action. So I know a lot of people have asked me about the SOX index, the short SOXS. I'm not interested yet. I will be interested very soon. I'd like to see Dow go to D, and then I can do this whole analysis based on everything in concert, going to D or E to the upside in the daily charts. I'm just holding off on the SMHs. They're acting very well right now. Dow's at 45 at 22,086. It's just got 34 points to go to make an all-time high. I think it might do that by tomorrow. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So I was asked yesterday at this time, I was asked, maybe it was just a little earlier, about OSTK, which is Overstock.com Inc., online products. And what I said is, I have to show you something. And I went to TC2000, the Warden platform I've had for years and years. Sometimes I wonder why I have some of these programs and pay every month, because I don't actually look at them that often. But when I do, I get a lot of information. I just don't either have time or I don't remember to look at them. That's the thing. But I go through phases with this particular one because I developed some kind of analysis that says that there are certain stocks that do something and they can skyrocket. And sometimes it's really hard to get on them. It's the second day or third day of a big move up. And what do? Do you jump on? And I found that there are certain stocks, if they're in the news for whatever reason, you jump on and you just get on and ride it and you put in a stop and you just let it do whatever it has to do. And it can be very good. So I had said yesterday, when we were down at about 27.80 on Overstock, that this is one of those that you just hop on board and you ride it, you put in your stop, you have a trading stop, and that's just a position that might work out even longer term, or it could be very short term. Well, what happened was it went even higher. It went to 29.38. And then today, what does it do? Just to kind of stick its tongue out at me, it's very personal. It goes to 29.95, and now it's pulling back to 28.71. Down 24 cents. The 120-minute chart, and this is really tough to do because it went to a peak A, pulls back, goes into a leg B. This could be a bit of a deeper pullback to the 27.15 area. So what do you do? And the question was, I had recommended to this person that asked yesterday, who was it? It was Peaky, and I said, I would actually nibble here and treat it as an informational thing because it's going to pull back. And you know it's going to pull back, but it would be nice to see where it goes to in this leg. So now the question is, at this point, what would you be doing? And my answer is, what I forgot to do, I saw it and I was about to do it, and then I think I ran out of time. This weekly, I'd done this ages ago on Overstock, OSTK, trading at 28.70, down 25 cents. There's a technique I use on the upside of the chart, not the bottom of the chart when I'm drawing the cup formation. You see this double cup formation, this U and the second U, and then there's a larger U shape or cup shape formation here going to that D. But you see above it, I put in a semicircle, like a cup formation from the top of the one to the top of the lower peak D, and then to the peak C minus, the second peak C minus at 35.60, July of 2013, the monthly chart. And now it's done the same thing, and it's gone right to that line, and it's a line at D. And D and C is where it's pulled back from before. So I'm saying, okay, so this is where it's in E in the daily. I'm looking at this and I'm saying, to break out from here, I think you're going to need the market as well as other things. So this is where I would say the little nibble that you might have had yesterday at 27.80 or 27.90, whatever it was. Yep, that's fine. I'd still keep it, but I'd have to have a stop, and I'd have to say, you know what, this is one that I'm not going to do. I'm going to put in a signal or something to say that if at 28.70 this pulls back to the breakout of that peak D of 25.50 on the 13th of September, I want to look at it again. I want to see, is this now going to pull back way sharper, or is this the next buy entry point? So I'm going to say to you, to be honest, I would not be buying it right here. This is very different to, this is very different to, not the, I don't want the 10-minute chart. This is very different to, there, the 2-minute chart, looking at, no, that's not the 30-minute chart. Ooh, look at that strong 30-minute chart. Where am I here? Ah, there it is. The 2-minute chart of Overstock, OSTK. Look, 30 seconds. How did I get the 30-second chart? Oh, man, I need this right now. There it is. Okay. OSTK. This is a, how can it be a daily chart? Oh, we're not looking at OSTK. I'm sorry, we're looking at the 2-minute chart of, I'll find it. There it is. Of Roku. Okay, that's what I really want to look at. There it is. So that's very different. Look, there's that E. It didn't pull back. It just kept going. In fact, that's an E, and this is an F. Now it's going to have a little bit more of a pullback. But this is different because this is early in its life cycle, even though it's a 2-minute chart and it's just been trading since 10:30 or something like that. This is early in its life cycle. So that's very different. This is later in its life cycle. So I don't want to be doing anything that says I'm putting in a bigger position when there's a chance that this candle was a news-related candle, could see the gap filled in at some point, and that gap is underneath 25.40. Let me see, 25. So yeah, but if you bought some today, earlier on, 25.70, 24.70. So OSTK, Overstock, I'd say if you're in here, I would not do anything. You've got it, stay with it. It's still one of the sexy stocks. It's had a fabulous move. It's a stock that money's coming into. Just want to see the volume here. The volume there is 325,000, 2.8 million, 1.25 million. Volume is drying up a little bit. It's only 2.5 hours. It's 3.5 hours into the day. Yeah, I wouldn't do anything. Keep it there. Let's look at it over the next 2-3 days. Be prepared to have this pull back about, ooh, that'll be 3 points. I don't know about 3 points. Let's go one step at a time. In the meantime, you can give me an email, whatever it is, if it drops below 27.45 between right this minute and Monday. But if it holds, that says, you know what, it's even got a little bit more to the upside. All right, so those are the things I wanted to know. Then, okay, yeah, some good questions. Apple. Apple trading up yesterday, hits the 9-period moving average, down today, down $1.19 and 153.04. Apple needs time. Apple is an incredible company. It needs time. And I suspect that it is getting mature in its life cycle, but it should still make new highs in 2017. And then I think you have to be very careful. So what would I do right now? I would do nothing. I want to see how it holds the whole 145 to 140 area over the next month in October. If it actually rallies to 150, 157, 160 in the next week, I'm going to have to be so impressed. I'm going to say, you know what? This is an incredible company. Buy and hold, trading it is not worth it. But I do see that it's going to have some resistance. I think my eye says that it's going to be coming back to test the 149s. Hope that helps you there. The question, what was the question? Yeah. Walmart. Walmart, when I last looked, was doing okay. Yeah, this is a high-level consolidation. Almost looks like the Qs, like the NASDAQ. I like it, but I think it's in a choppy digestive phase. I like it much more if it can trade slowly down to 77.50 and then hold it like a rock. And then I'll be looking at it and saying, you know what, now I can move back in the rectangle formation towards the 80s. But let's just see. That's what I'm saying right now. Next question is, yeah, this is a very good question. At what point you say this is a buy mode versus the top after peak D? That is a great question. That's probably for tomorrow, but I'll try to get to it today. Question number, Dan, take a quick look at SONC, Sonic. I'll have a look at that. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So I was asked about Sonic. I just did some analysis on it's trading at 25.30. I think it's in leg C in the daily. I think it's in a try for the 25.76 200-period exponential moving average. The pattern in the weekly chart has these arch formations that tend to fail at peak C minus. It's done that very often over the past couple of years. And every time it goes to an A, if it has certain conditions, it goes to an A, pulls back, and then goes B and C. So I'm looking at this weekly chart, and I'm saying it's just about a cross positive. The question was, can you take a quick look at SONC for a long position if you have time? I'm going to say to you, Dano, that I would start the position right here, 25.31. Just because it's a starter position, I have a slightly wider stop than normal. I would put the stop in at 25.31. I'd give it a 1.5 just to start a position, 1.5, maybe something down the 24 area. Let it get to, if it can get to a D, and then we'll analyze it to see where would you add to it. Is it worth it? How's the weekly chart acting? But so far, everything says it's in a bounce formation, and the bounce should take it to the 26.50, 27.30 area. if two things happen. One is it goes above 25.76 in the next 2-3 days and then holds steady and then starts another move to let the weekly chart improve technically. So yeah, I would, but it's a starter position and have a slightly wider stop. Then someone in the Peaky said, beautiful trade on MWA, Basil. Kudos. This is Mueller Water. We've been in it a couple of times. The last one we got in, and now it's trading at leg D. It's extended that D, but what I really liked is that the patterns that we've studied, the left side, right side price time match with the inside wedge, it's 1 week, it's 2 weeks early to get to 1291. So it has a whole another 2 weeks to go 1 penny higher, high. That was the first target. Yeah, it's nice action. You never can tell with these small, low-price stocks, but so far this is acting exactly the way we wanted it. Thank you for the kudos. Now, we're about to wrap up. I'll be back tomorrow, of course. This is going to be Technical Friday. I want to see the Dow get as close as possible to 22,419. 22,420 starts leg D. That's the target we have in the Dow, and that's the target would be for the general market to reassess where we are. Have a wonderful day. Stay tuned for the one and only Steve Rose. Then we've got Dave White, we've got Tom O'Brien, and you've got
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.